Hello everyone, my name is Ryan Burke and I'm with the Department of Local Government Finance. Today we'll be learning more about your 1782 Notice Report. Now unfortunately, this is one of the least understood out of the many reports that we issue, but this is also one of the most important ones as well. We'll begin by talking about the budget calendar, not in very much detail. We'll take a look at the DLGF's role in reviewing your budget. We'll review the actual 1782 notice, the different parts of it, through the table of contents, and we'll also answer several frequently asked questions as well. Let's begin by taking a look at the budget calendar. So a lot of these dates have already passed. By statute, the last day to adopt would be November 1st. You'd have to have your public hearing at least 10 days beforehand, so that'd be October 21st, and October 11th would be your last day to advertise your notice to taxpayers. This is the advertisement that must be submitted at least 10 days before your public hearing. These 3 dates all assume you're waiting to the very last day, which hopefully you did not. One thing that I really want to point out on this slide is that our policy had always been to submit all of your budget forms within 48 hours. So in the past, if you didn't do it within 48 hours, it was fine. We would really just bug you with phone calls and emails to make sure that was submitted. But one thing that's incredibly important to note here is that there is new legislation stating that each unit needs to submit all of their budget forms within 5 business days after adoption. So that's something incredibly important to keep in mind. Now, a complete submission would mean submitting all of your budget forms, give or take the debt worksheet if you don't have any debt service funds, and also scanning and uploading that signed Form 4 that you printed off to have your board or council sign at the adoption meeting. So again, make sure you submit all the budget forms and scan and upload that signed resolution, the Form 4. When you're in Gateway, you see the budget form menu, which has all of your different forms. By default, they're all yellow, which means they have not been submitted yet. As you go through and submit them, they turn green. Form 3 is the only form that you submit early. But within 5 business days after adoption, they should all turn green to represent that they've all been submitted. The only exception here is the debt worksheet. If you do not have a debt service fund, you would not need to submit the debt worksheet. Now, after you adopt and you submit your budget forms, you would still need to scan and upload your signed Form 4. So when you log into Gateway, you would click on Budgets, select your unit, and this is where you typically click View Forms, Enter and Edit Budgets. Beneath that, it would say Submit Signed Form 4 and Other Documents. That's exactly where you want to click. Next, you would enter a description. We're not too picky. Form 4 works great. You click Browse to find the scanned document. This is where it can be a little tricky, so make sure you pay attention where you save it and what the name is saved as. But once you find your file, click Upload, and that will present this table that you see down below. You see a blue link on the far left. That's the document itself. I would highly encourage everyone to make sure that they are uploading what they intend to. Sometimes we get things that aren't government documents, or they're Form 4s but they're from the wrong year, or they're not signed. So always take a look at it and make sure that it's exactly what you need to upload, because otherwise you're not submitting what you need to by the deadline. Now, October 31st is the deadline to submit a local income tax rate change to the DLGF via Gateway in order for that change to go effect by January 1st of the next year. Now, as early as November 1st, the department can start distributing the 1782 notices. This is incredibly early compared to previous years. But as we strive to meet our new deadlines, which we'll talk about in the next slide, we're doing everything we can to help make sure we meet those goals. Now, if you are doing any additional appropriations, make sure that they're submitted as soon as you adopt them, maybe a day or two if that. But December 16th is the absolute last day that we can guarantee a review on additional appropriations. That's because we have 2 weeks in order to provide a review of your additional appropriation. Now, December 31st is the deadline for the department to certify the 2020 budgets, tax rates, and tax levies for almost all units. This is the same deadline as we had last year that we were thankfully able to meet. Now, the year before, it is 6 weeks sooner than the long-standing February 15th deadline. And not a lot of deadlines, if hardly any at all, have changed on the front end of this. So we're making a lot of adjustments and really striving as a whole department to help meet this deadline. Now, January 15th is the deadline for counties that have at least one unit that's going to issue debt in December or file a shortfall appeal. So that would give us 2 more weeks. Now let's go over how the DLGF reviews a budget. So IC 6 1.1.17.16 states that the Department of Local Government Finance shall certify the tax rates and levies for all funds of political subdivisions subject to the department's review. And with this, I'm not going to read through all this. Essentially what this says is that the DLGF is responsible for making sure that the certified budgets are fundable. We don't want to approve you to spend a budget that you just won't have the funds for. So we'll go through and make sure you're within your maximum levies. Those are property taxes. We'll make sure that your budgets are funded, and if not, we'll do a more detailed review to really analyze exactly how much would be funded, and the budget will be cut down to that funded amount. So all in all, the department's responsible for 3 main tasks when we review and certify a budget. The first one is, are the property taxes within their statutory maximum amounts? So if they're not, they will be cut down to the maximum amount allowed. Are the submitted budgets fundable by the available revenue and cash? In this case, if they're not, the budget will be cut to an amount that's funded. And were the proper budget procedures followed? Now, this is a big one. If you do not advertise on time, if you don't adopt on time, if you don't ever submit your budget forms, this is where what's often referred to as a continuation of last year's budgets and levies would occur. Technically, it's a lesser of last year's budgets and levies, or the ones adopted or advertised this year. So keep that in mind. Now let's start reviewing the 17.2 notice. So what this statute says is that we have to give you guys notice of any revision, reduction, or increase the department proposes in the levy or rate. Now, once we notify you, you have 10 days to respond to the department electronically. So this is all done through that 1782 notice. Now, the response that you send back may say no changes are requested, or it may be including budget reductions, which would be reducing the 2019 budget to better fund 2020 in this case. Reallocating levies. So let's say you adopted over your maximum levy. We took it from the general fund, but you would prefer it to come out of another fund. That's another good example of something you can change. A revision in the amount of miscellaneous revenues. So maybe you had some type of local revenue that's changing. You can tell us what that new amount should be and we can add it. It could also be maybe you allocated your certified shares to one fund, but should actually be allocated to another one or split between them. You could also respond on any item that you review in which you believe the department is in error. Now, the 17.2 is comprised of several different reports. Some reports will everyone receive. Some reports are only received by very specific units. The cover page is received by everybody. This details the deadline that you have to respond, and this is typically the sheet that's used as a response. The 1782 Notice Notes Report is kind of one of the best summary reports that we have. It lists out every fund that we have, the certified budget, along with any notes. The fund report is essentially a fancy version of the Form 4B in Gateway. It reflects any changes that we've made, and then also goes into some analysis of the property taxes. The estimates of miscellaneous revenues is essentially the Form 2 in Gateway. The maximum levy report takes you through the calculation of how much you're allowed to raise in property taxes. Now, on top of that, there can be some miscellaneous changes for counties, cities, and a unit that has done an appeal, or towns. Rate cap calculations. If you have a cumulative fund that's subject to a rate that's trended, which I'll just really describe more later on, or if you have a debt service fund, you'll also receive a copy of the debt worksheet. So let's take a look at these in more detail. So the cover page is included in every single 1782 notice that we send out. There's over 2,000 of these. The unit's 1782's notice expiration date is something that's very important to take a look at. It's in bold right there on the notice. It's absolutely important that you respond by that date. Otherwise, any requested changes will not be taken into account. Now, there are two checkboxes to check. One is no changes requested. The other one is requesting changes. And at the very bottom of the form, you'll see how to respond to the 1782 notice. You can send an email with a scanned copy of this to the 1782 notices at dlgf.in.gov email, or you can fax it to us. This is a screenshot of the body of the notice cover page. So you can see here in bold, this is from a few years ago. It expired December 28th, 2017. Then there's two checkboxes. One is no changes requested. The second one is please make the following changes according to the attached information. So it's very important to read that carefully. Just because you check that box doesn't mean that we'll necessarily be making any changes. You have to tell us what changes you would like to request. And if it is a certain request that would require other documentation, definitely provide that documentation as well. For example, if when you submitted your budget in Gateway, it had a transfer from the general fund to rainy day for, let's say, $10,000. That's a great estimate. However, the DLGF cannot use that transfer unless there's a resolution included that authorizes you to make that transfer. So that's where you may see a note saying the transfer was removed, and you would check the box saying, please restore my transfer to the rainy day fund per this attached resolution. And that's a nice, concise requested change. And with any response that you send back in, you'll need to provide a signature, an email, printed name, title, and date. Now the 1782 notes report is included with all 1782 notices we send out. Every single fund will have its own little section on this report that lists the certified budget, along with any notes for the certified budget and tax rate. In case the budget has changed at all, or if it hasn't changed, there will be a note pertaining to that. If the levy has changed, or even if the levy hasn't changed or the rate hasn't changed, there will be a specific note pertaining to that fund's budget and rate. Now let's take a look at a few of those notes that you may see specific to each unit. There's a set of codes for the budget, and there's a set of notes for the rates. There are several more than these that are possible, but here are some of the more common ones. So let's take a look at the budget print codes first. The very first one is the one that pretty much everyone hopes to see. Is budget approved for displayed amount? This essentially means that your budget has been approved for what was adopted. The next one is a little bit less common, but we do definitely see it. It says the budget has been decreased because projected revenues are insufficient to fund the adopted budget. In this case, the budget just wasn't funded. So first we cut down all the cash from after the budget year. So we essentially got that operating balance down to zero. And from there, we cut into the allowed spending for 2020. Now next we have budget denied due to failure to file appropriate SBOA reports with the annual financial report, the 100R, anti-nepotism, and contracting policies, if those apply to you. If you don't submit those, we cannot certify a budget for you, so the certified budget will be zero. The next one pertains to units that adopt more than they advertise. That's not allowed, and you'll get this note if you do so, and you will be certified for the lesser amount. Now, the next one says debt service budget denied. because the unit failed to submit proper documentation of new debt. So in order for us to approve a budget for a new debt, we have to have documentation making sure that it was adopted correctly. Let's move on to the rate print codes. Rate and levy are kind of synonymous. They definitely go hand in hand with one another. Rate approved. You'll typically only see this for cumulative funds that are rate driven. But in this case, that's exactly what you want to see. That means that the rate that was adopted was approved. The next one references a unit that adopted over their maximum levy, as much as property taxes as they could receive. In this case, the rate, or really levy, was reduced to remain within the statutory levy limitation. The next one is probably the most common one, and the one that everyone really wants to see, is the rate was reduced due to increased assessed valuation. Let me take some time to really explain what this is, because I know it's definitely confusing. What this means is that, let's say you adopted a $100,000 levy, and you're certified for $99,980. Pretty close. We are limited to a 4-digit tax rate, and when we calculate the rate, that generates a levy. And because of the 4-digit tax rate, you can be mathematically under your max levy, but still be, in quotes, you can't see it here, but at your max. And I'll talk more about that in more detail later on, but I'm confident I can get you to understand that a bit better. But essentially this means that your adopted levy was approved after making minor adjustments. The next one refers to units that adopted a higher levy than what was advertised, and the rate reduced per unit request. This essentially means that someone has responded saying that we want to reduce our tax rate further. I typically see this more often with schools and other larger units that have a target tax rate. And the very last one has to do with cumulative funds. If you do not reestablish your cumulative fund, you cannot increase it over last year's rate. And that's exactly what this note is saying. Now, on top of the individual fund sections of the 1782 Notice Notes report, there's also detailed notes that the department might provide, typically by the field rep, that has any pending questions or concerns or documents that still need to be submitted, or any reminders from the department as well. Also, a fund report will be included with all 1782 notices. This will contain the Form 4B, that's slightly modified, a budget summary information, and a maximum levy analysis. So the first part of the fund report is essentially a restatement of the Form 4B that reflects any changes. However, with that being said, lines 1 through D don't exactly match up to the Form 4B. Let me explain why. Line 1A is the gross budget estimate. That is your budget plus the property tax cap. This represents the total on Form 1, 4A, and 4B of the Gateway budget forms. 1B is the estimated tax cap, and if you subtract 1B from 1A, you get 1C, your actual allowed budget to spend, the net budget estimate. And 1D, I don't want to confuse you here, but that's really only for schools. It's actually titled line 1A on 4B. So if you're a school, know that this is line 1A on your 4B. This is the school transfer out from education operations or vice versa. If you're not a school, you can ignore line 1D. It does not pertain to you. The DLGF looks at 18 months when reviewing the budgets, last 6 months of this year, all of next year. Line 2 has to do with expenditures for the last 6 months of the current year. Line 3 are any additional appropriations planned for the last 6 months of this year. 4A and 4B are transfers out or temporary loans. And line 5 are your total expenses for 18 months, including the tax caps. So that's your total expenses. Line 6 would be your cash balance as of June 30th of the current year. Line 7 are your December property tax estimates. Line 8A and 8B are your miscellaneous revenues. These tie into your Form 2 or your estimates of miscellaneous revenues. That's also included in this report. So this is really kind of a summary of everything. Line 9 are your total funds available, not including property taxes for the following year. So that's line 6, 7, 8A plus 8B. Now you have your total expenses on line 5, total funds on line 9. If you subtract them, on line 10 you get the minimum amount you need to raise in property taxes to just barely fund your budget. In this case it's $46 million. If we jump all the way down to line 16, there's the certified levy of $69 million, or really amount to be certified if there's no changes, and the tax rate beneath that. So in this case we needed to raise $46 million. We actually raised $69 million. If we subtract the two, we have an operating balance of $22 million. This operating balance is incredibly important. If it's zero, that means that the budget was likely cut or is just barely funded. And if that's the case, you're likely to have cash flow issues, because if it's backed by property taxes, you don't get any funding until June of the current year. That's where temporary loans may be involved. Now let's take a look at the budget summary of the fund report. This lists every fund that we have. You also have the assessed value, the tax rate, the tax levy, and something called control, which is really the max levy type. In this case, it's all 0 or UT. UT stands for unit, which is really more of your civil max levy. 0 is typically seen for bonds, so any debt funds, maybe a cumulative fire fund. These are funds that are outside of the max levy. But then there's also TF for township fire, FT for fire territory, and SO for school operating. So I know a lot of people have probably looked at that and kind of scratched their head on exactly what that means. So underneath this section is a summary for each max levy type that's not outside the max or 0. And this focuses on the normal max levy, accounts for any increases, and then gets you to that working max levy down at the bottom. That working max levy is the most amount of property taxes you can raise for those funds subject to this max levy type. So remember on that previous page there were quite a few that said UT. Out of those funds indicated as a UT, or under the unit civil max levy, they can only raise $75,836,073. Now on the bottom right of this screenshot, it tells you how far under the maximum that they are. In this case, it's a little over $13,000, and we'll talk more about that in later on about why you might actually be under your max levy, but still be, in quotes, at your max. Next, we'll talk about the Form 2, or at least the 17-2 notice version of it. This is the DLGF estimates of miscellaneous revenue. This is essentially a restatement of miscellaneous revenue from the Form 2 that may or may not have some adjustments done to it. So in this case, we have these 3 different funds and 2 columns. Column A is for the last 6 months of the current year, and column B is for all of 2020. Column A ties back into the line AA of the fund report, or line AA of the Form 4B, while column B is total for line 8B. A max levy report will be included in all 17-2 notices for all units except conservancies. That's because these are outside of the maximum levy control. For units with multiple max levy types, there will be a max levy report for each and every type. So if you're a township and you have some funds coded as UT or unit, you'll have a max levy report for that. And separately for your fire funds, you'll have a fire max levy report. And in most cases, this can be reconciled back to the normal max levy at the bottom of the fund report. Now let's talk about miscellaneous changes. So this is a separate standalone report that all counties receive, all cities and towns that happen to have a cumulative capital development fund receive, and any unit that has an appeal approved by the DLGF, they would receive this as well. And you've got this total down on the bottom right of the screenshot that also ties in to that max levy calculation at the bottom of the fund report. where it has your normal max levy plus miscellaneous changes. That's where this comes from. Gives you your working maximum levy, the amount you can raise. Now let's talk about the rate cap calculations report. This one looks pretty confusing. It only applies to some cumulative funds that are subject to trending. Let me take a little bit of time to explain exactly what that is. So I don't know for a fact, but I have a feeling that when this was enacted, there wanted to be a control on the amount of property taxes these cumulative funds could essentially create from property taxes. So years and years ago, let's say there was a cumulative fire fund adopted at the maximum rate. As assessed values go up and up and up, if the rate didn't trend down, the property taxes generated from that rate would continue to increase over time. And I believe the intent was probably to keep levies roughly consistent when assessed values go up. So as a result, when you have increasing assessed values, your rate cap for a cumulative fund that's subject to trending may decrease over time, but that should keep the levy you receive roughly consistent. So that's exactly what this calculation gets into. The very bottom, step 8, represents your cap for that fund. Now let's talk about the debt service worksheet. Again, this will only apply to you if you have a debt service fund. And it has three different columns. Line 2 represents the payments to be made in the last 6 months of 2019. Line 1 represents payments made in the full 12 months of the budget year, or in this case 2020. And line 11. This is more of a calculation in most cases. This is dependent upon when the debt was incurred. In this case, here it says post June 30th, 2014. No. So it was incurred prior to June 30th, 2014 or on it. This means that it's capped at 50% of the 2021 payments, or the first payment due in the first 6 months, whichever is less. Now, if this was incurred July 1st, 2014 or after, it's subject to a different cap, or 15% of the year after the budget year's payments, or 2021 in this case. So what you can do is line 1, the $2,440,000, you should be able to reconcile that to the fund report's budget. If it's less, essentially if your fund report is less than this, that means you likely under-adopted, and you'll take a look at your notes and the field rep will help explain more about what needs to be done. Now let's go over some frequently asked questions. The first one is, who does the department send the 1782 notice to? If you remember on the budget form menu, the big yellow or green table that lists all of your all of your forms, the very bottom one says 1782 notice recipients. Any email address on this form will get a copy of the 1782 notice once it's sent out. Now, it's very important to make sure that you add multiple email addresses on here, maybe even multiple recipients, because once this is sent out, that 10-day window starts closing. It's not based off when you necessarily read it. It's based off when it's sent out. So if you happen to be sick or on vacation, it definitely happens. You want to make sure that somebody gets it in time to really review it thoroughly and respond with any questions or requests by the deadline. And here's a snapshot of the budget form menu, and here it is at the very, very bottom. If you click to view form, you'll see where it has the contact name, contact email, and optional phone number. We won't be calling you about this, but any email address listed on here will get a copy of the notice. Now, it's also sometimes a good idea to provide maybe a personal or secondary email as well, because sometimes with, let's say a school or a county's email, things can sometimes get caught in spam. Now, this is extremely rare, but when it happens, you definitely hear about it, and I don't want this to happen to anybody. So please make sure that you add multiple recipients to this just to be safe. Now, all of these have rolled over from last year, so make sure they're still correct. If any updates are needed, please make those updates. Question 2. Will the department be sending the 1782 notices out to each unit in the county at the same time? Well, we historically did this in, let's say, 2 years ago or beforehand. That's not necessarily the case anymore, especially with our new deadline. We're trying to meet that any way we can. So you may get your 1782 notice much earlier than some of the other neighbors in your county. So one thing to keep in mind is that just because somebody else has received it doesn't necessarily mean that you haven't gotten yours yet, but it's still a good idea to go and check your spam and just make sure that you do respond to it and start reviewing it once you get it. All right, this one I need to be careful with. How should I review the 1782 notice? Very carefully. With that aside, the department is hesitant to prescribe a formal procedure for reviewing the 1782 notice. The entire 1782 notice process represents the unit's final opportunity to review the information used and the calculations done by the department prior to budget certification. The department can highlight some key concepts that all units are encouraged to consider when they receive their 1782 notice. That's what the next few slides will do. So the very first page, the cover page, one of the most important things here, and the only thing that changes here, would be the expiration date. You have to respond by this date, otherwise we cannot take into account any requested changes. So definitely take note of when that date is. The 1782 Notice Notes Report, this is that second page. I would definitely recommend you take a look at the budget amount on the far right for each fund and compare that to the Form 4 that was adopted. And also take a look at the notes provided for each fund as well. So in this case, the general fund, you've got the certified budget, but you can also tell that the budget's been reduced because the revenues aren't sufficient to fully fund the budget. Now with the rate reduced to increase assessed valuation, that means that the levy was essentially approved after making any minor adjustments because we have a 4-digit tax rate and final assessed values to work off of now. Now at the bottom of the 1718 notes report, you'll notice any hand-typed notes for you done by your field rep. Let's review a couple of these. In this case, a $50,000 transfer into the rainy day fund has been removed because a signed resolution has not been provided. Please provide a signed resolution allowing this transfer if you'd like it to be restored. So I think that explains it very well. If you have that resolution now, on the cover page, you check, please make the requested changes. Say, please include this approved rainy day transfer resolution and attach the resolution as well. Let's take a look at the last one. This is note that you won't always see added, but if you do adopt over your maximum levy, sometimes you do have the opportunity to move it around from one fund to another. And by move around, I mean the reduction in levies. So the total levies adopted exceeded the maximum levy. Preliminary cuts to the levy were applied to the general fund. Please respond with how the town would like this to be reallocated. So maybe some of the cut should be allocated to MVH or parks. This is where you get to make that decision. We don't want to make the decision of it should be cut here, here, and here. We make preliminary cuts, and we want you to respond with how you would actually like those to be made. Now let's take a look at the 1782 fund report. So the AV, make sure that is correct for every fund. That should be here at the very top, but it looks like that hasn't transitioned very well to this presentation. Line 11, which here, blacked out, shouldn't be though. This is the operating balance for each fund. You can find that again on the fund report. If it's ever 0, that means that either the budget has been cut or is just absolutely barely funded, which will definitely create cash flow issues if it's backed by property taxes and it has some expenses in the first 6 months of the year, especially earlier on. And I say this because the June settlement, you don't get until June. So if you start the year with 0 in cash and you have to operate off that cash balance until June comes, it probably won't be very easy, and you'll likely need to do some temporary borrowing. You also want to take a look at line 16, which here, blacked out, but this represents the levy applied to each fund. So you'll want to compare that to the Form 4. And more than likely it's slightly off, but should still be fairly close as long as there haven't been any reductions because maybe you adopted over your maximum. Just tie that into the 1782 notes report and the code associated with it. And also take a look at what the final tax rate is on the very bottom. Now with the fund report, look at sections 2 and 3. You'll want to compare the levy and the rate for each fund to the signed Form 4. So in this case, the drill fund had a rate and had a levy. Beneath that, you have the normal max levy, let's say $250,000, and there were no other adjustments made to it. So the working max levy, mystery revealed, is $256,863, which, if you crunch the math, is really close to the max levy. And I'll explain more about that fairly soon. Now let's take a look at the Form 2, or the miscellaneous revenue report. Are the miscellaneous values still accurate? I would take a look at your revenues and just make sure that those still look correct. Please note that more than likely, unless you adopted within your maximum and the budgets were all funded, we likely changed the FIT, R112, Financial Institutions Tax, Vehicle License Excise Tax, or R114, and the CVET, Commercial Vehicle Excise Tax as well. If the local income tax certified shares don't match the final values, and we are editing your revenues, it's likely that those may be changed as well to the final estimates. So definitely review these to make sure that they're still accurate. Another example would be, let's say, a rainy day fund. You had a transfer in, but you didn't provide a signed resolution. Those would also be removed. Now let's take a look at the debt service worksheet. Are all of my debts listed? Do the totals for lines 1 and 2 match my fund report? The only real exception I can think of why that might not match is if your budget is too short to meet your payments for the current year. You may also see an amount on line 3, any additional preparations done in the last 6 months. And you also want to ask yourself, will these amounts cover my debt payments? It doesn't happen very often, but sometimes you have a unit with quite a few debts and they add anticipated debt service. But if they're incurring 2 new debts and they only let us know about 1, we'll only add that 1 because that's all we're aware of. So definitely be sure to review this carefully. Make sure the amounts are correct and make sure there's no debts that are left off. Now let's take a look at why my certified levy is less than both my adopted levy and my maximum levy. This question definitely comes up every year and impacts a huge majority of units. It's ultimately caused by the relationship between the levy, AV, tax rates, especially because we're limited to a 4-digit tax rate. So here we have an example. The adopted levy is found on the signed Form 4. The working levy is found on the fund report in that very last section. And the certified levy is confirmed on the fund report. That's that summary. And here you can see that they're fairly close. They adopted likely over their maximum. The maximum is, actually they did definitely adopt over their maximum, almost 2,000 over, and they ended up being just slightly under their max. We'll talk more about that next. So on Form 4, you can see their total adopted levies, 473, 586 in the middle. On the fund report, you can see that their working maximum levy is 471, 669. And one thing I really like about this is it gives a nice, consistent summary of the bottom right. It says it's under the max levy by $28. And here you can see that the total levies are 471, 641. In this case, the control or max levy type are all UT, which means they're all under the same max levy type. So the levy is calculated using the formula below. You have the assessed value times the tax rate divided by 100. That's how you get your levy. So although you adopt a certain levy, let's say very specifically $100,000, once we have the actual assessed value and use a 4-digit tax rate, it's highly unlikely you're going to come back to the exact $100,000 figure. So the department will try to get you to the maximum allowable levy as long as we don't go over it. So while the unit is adopting an amount, the department must use the assessed value and the tax rate to calculate the levy. That's why you see the difference sometimes. Actually, most times. So a mill is a term that the department uses to describe the impact of increasing a certified rate by 0.0001, the smallest increment of a tax rate that we can change it by. So for this unit, it generates $31. Now, a nice, easy, concise way to think of this is a mill is how many millions of dollars your assessed value is. In this case, it's $31 million. That's the assessed value. So 1 mil is 31. This means that you could be under your max levy by up to $31 and still be at your max. So let's take a look at this example. You have the assessed values that don't change, and you have the tax rates, 1.5035 and 1.5036. If you go through that calculation, you can see that the difference here is $31, and that's the smallest increment we can change the tax rate. Now, the higher the assessed value of the unit, the higher a mill will be. Let's say you're a very large city with $6 billion of assessed value. Now, a $6 billion has $6,000 million in it. So 1 mil is $6,000. So they can be under their maximum levy by $6,000 and still be at their max, in quotes. So this concludes our presentation. Here's the contact information for our budget director, Fred Van Dorp. His phone number, email address. You can also reach out to your field rep as well with any questions. But with this, I really hope that you learned quite a bit more about this fairly confusing process. In summary, I would say that once you get this notice, don't hesitate, don't be intimidated by it. Just go through and start looking through it. You now have this presentation as something that you can refer to in order to help make sure that you can understand it a little bit better. Where are these things tied together at? And definitely take a look at the notes. But I'm very confident that through this, we will all start to understand this a bit better and just really feel more confident in the work that we're putting out there. Thank you very much and have a great day.